The year 2025 is here, and the stock market is brimming with opportunities. In today's video, I'll reveal the top 10 growth stocks you need to watch. And make sure to stay till the end, because I've got a surprising pick that will blow your mind. For deeper analysis, don't forget to check out the research reports linked in the description. Let's dive in. Raymond Lifestyle is on the rise, and I'm excited about its potential. With a target price of 3,000 rupees, we're looking at a remarkable 49% upside. The festive and wedding seasons have sparked a demand recovery, driving secondary sales growth of around 12 to 14%. This is a game changer for retailers. The branded apparel segment is set to shine, especially with the expansion of their retail footprint and new categories like sleepwear and innerwear. Plus, their operational efficiency is impressive, boosting a 30% operational ROAS. Raymond is ramping up its exclusive brand outlets from 463 to nearly 900 by FY27, targeting cities from Tier 1 to Tier 4. The Ethnics by Raymond brand is also poised to capture a significant slice of the ethnic wear market. Awfis Space Solutions is making waves in the real estate sector with a strong buy rating and a revised target price of 1,049 rupees. In the first half of FY25, they achieved an impressive 39% year-on-year revenue growth, and they're on track for over 30% growth for the full year. Their EBITDA margin has improved to 13.3%, and they expect to exceed 12% for the year. With over 110,000 operational seats and a pipeline of 150,649, they're clearly scaling up. The flexible workspace market is booming, with a projected stock of 80 million square feet by the end of 2024. Plus, flexible workspace operators accounted for 17% of leasing activity in Q3 CY24. While competition is a concern, Awfis is well-positioned to thrive in this dynamic environment, making it a compelling investment opportunity. PNB Housing Finance is making significant strides in the non-banking financial company sector, and it's rated a solid buy with a target price of 1,160 rupees. Looking at the projected financials, we see total income soaring from 26.7 billion rupees in FY25 to 42.8 billion rupees by FY27. Profit before tax is also on an upward trajectory, expected to reach 39 billion rupees in FY27. The company is strategically shifting its focus towards affordable housing, tapping into government schemes like the Credit-Linked Subsidy Scheme to fuel growth. With a recent upgrade to R+, borrowing costs are down, enhancing competitiveness. Plus, they're improving asset quality, evidenced by a reduction in non-performing assets. MTAR Technologies is a compelling investment opportunity in the engineering and manufacturing services sector, particularly with its strong foothold in clean energy. With a target price of 2,100 rupees, we're looking at a potential upside of 35%. The projected financials are impressive, with sales expected to grow from 7.4 billion Indian rupees in FY25 to 12.2 billion Indian rupees by FY27. The EBITDA margins are also on the rise, hitting 26.5% by FY27. What's driving this growth? A significant 60% of their revenue comes from the clean energy segment, primarily through Bloom Energy, which is a powerhouse in this space. However, it's crucial to keep an eye on client concentration risks and market competition. Despite these challenges, the demand for clean energy solutions is soaring, and MTR is well-positioned to capitalize on this trend. With a robust order book and a strategic outlook, MTAR Technologies is definitely a stock to watch. Bajaj Finserv is on an exciting trajectory in the financial services sector, with a buy rating and a target price of 2,350 rupees. Over the next 5 years, we can expect total income to grow at an impressive 20 to 22% CAGR, reaching 3 lakh rupees crore. Their profit after tax is projected to soar to 20,000 crore rupees, driven by a robust customer base that's set to expand to 20 crore. The company's long-range strategy emphasizes AI integration, enhancing efficiency and profitability. Their lending business is outpacing the industry, aiming for a 3 to 4% share in total credit by FY 2029. Meanwhile, the insurance segment remains strong, with Bajaj being the third largest player in the market. This is a company to watch as it captures growth opportunities across India's financial landscape. Our small finance bank is making waves in the banking sector with a market capitalization of 440 billion rupee INR and a strong buy rating with a 12-month price target of 730 rupees. That's a potential upside of 24%. Looking at the financials, loans and advances are projected to soar from 1,041 billion rupees in FY 25 to 1,686 billion rupees by FY 27. Net interest income is also on the rise, expected to jump from 76 billion rupee to 128 billion rupees in the same period. Reported profits are set to grow significantly, reaching 36 billion rupees by FY 27. However, there are risks. High inflation could strain borrower repayment capacity, and competition from larger banks and finteches is intensifying. Still, our small finance bank is well positioned for growth, making it a compelling buy in today's market. Tata Power Company is making waves in the energy sector with a strong buy rating and a target price of 540 rupees. Over the next few years, they plan to invest a whopping 1.46 lakh rupees crore, focusing 60% on renewable energy. By FY 30, they aim to boost their profit after tax to 10,000 crore rupees, an impressive 2.5 times increase. Their revenue is set to soar to 1 lakh crore rupees, driven by significant expansion in renewable capacity from 16.7 gigawatts to 33 gigawatts. Tata Power leads the rooftop solar market with a 13.1% share, and this segment is projected to grow at a staggering 36% CAGR. They're also ramping up transmission capacity and targeting a customer base expansion from 12.5 million to 40 million by FY 30. With ambitious plans for pumped storage projects and a strategic partnership in Bhutan, Tata Power is well positioned for substantial growth. However, they must navigate potential execution challenges and profitability risks in their solar EPC business. The future looks bright for Tata Power. Coal India Limited, or CIL, is a powerhouse in the mining and energy sector, and it's currently rated a solid buy with a price target of 560 rupees. In the first half of FY 2025, CIL reported an offtake of 492.6 million tons, up 1.5% year-on-year, and production of 471 million tons, up 2.4%. The government's ambitious plan to add 80 gigawatts of thermal capacity by FY 32 is a game-changer, potentially driving 7 to 8% volume growth in the coming years. CIL boasts a robust financial position with a net cash of 49 rupee per share, making up 12% of its market cap. Plus, it's trading at an attractive valuation of 6.4x FY 26 EPAs, complemented by a dividend yield of around 6%. CIL is also diversifying its portfolio with renewable energy projects, having installed 83 megawatts of solar capacity and targeting 3 gigawatts by FY 28. Their coal gasification initiatives further position them for future growth. CIL's strong fundamentals and strategic focus on coal demand make it a compelling investment opportunity. State Bank of India, or SBI, is making waves in the banking sector with a strong buy rating and a target price of 1,050 rupees. The bank is eyeing a robust 15% loan growth in FY 2025 driven by solid corporate demand and a well-diversified loan portfolio. With a return on equity expected between 16 to 18%, SBI is positioned for steady profitability. Asset quality remains stable, with no major concerns even in unsecured retail loans. Credit costs are set to normalize, staying below long-term averages. SBI's liquidity is impressive, boosting a loan-to-deposit ratio of around 75% and a healthy liquidity coverage ratio. The bank is also focused on enhancing its deposit growth, particularly in the second half of FY 2025, aiming for double-digit growth in its CASA franchise. Valuation metrics show SBI trading favorably at 1.3x its core book value for FY 2025 making it an attractive option compared to peers. However, potential economic slowdowns could pose risks. Overall, SBI is on a promising path, emphasizing growth, asset quality, and liquidity management. Tata Motors Limited is a compelling investment opportunity in the automobile sector, currently rated as a buy with a 12-month price target of 970 rupees, offering a potential return of 30%. The projected financials are impressive, with net sales expected to rise from 44.5 billion rupees in FY 25 to 53.6 billion rupees by FY 27. EBITDA will follow suit, growing from 601 billion rupee to 772 billion rupees in the same period. The luxury car segment, particularly Jaguar Land Rover, is driving this growth, with a 3% increase in volumes despite supply chain challenges. Tata's electrification strategy is also noteworthy, with plans to launch several electric models, including an electric Range Rover by 2026. Overall, Tata Motors is strategically positioned for growth, making it a solid buy for investors looking to capitalize on the recovery in demand and innovative initiatives. At last, the moment you've been waiting for, the surprise segment. Let's delve into the ITI Mid Cap Fund, a mutual fund that's been gaining attention for its impressive performance and strategic investments. As of 27 December 2024, the NAV stands at 22 rupees and 95 paise, reflecting a robust 31.22% return over the past year and an impressive 23.81% annualized return over 3 years. The fund's top holdings showcase its strategic sector diversification. In healthcare, we have Lupin Limited at 2.86% and Aurobindo Pharma at 1.91%. The chemicals sector features Solar Industries India at 2.51%, while technology sees Mphasis and Persistent Systems at 2.34% and 2.09%, respectively. Managed by seasoned professionals, Mr. Rohan Kode and Mr. Dhiman Shah, the ITI Mid Cap Fund aims for long-term capital appreciation through equity investments in promising mid-cap companies. However, remember, while the performance is compelling, mid-cap investments come with their own set of risks. Always align your investment choices with your goals and risk tolerance. For a deeper dive, check out the linked research reports.